everyone, welcome to the KE Report in a daily editorial on Tuesday, July 15th, chatting with Craig Hemke, founder and editor of TF Metals Report. We are recording this late in the day on Monday, so when we get to the inflation data that we'll touch on, we don't have that data yet, just to get in front of that. But more importantly, we're going to be talking about silver's breakout, what the stocks are doing with the small stocks really performing well right now, and even touch a little bit on copper's impressive move on the back of the tariff announcement. Really one of the only markets that moved on that tariff day. Craig, let's start off with silver's breakout. Silver up near $40 an ounce. Most importantly, above a lot of resistance levels that were around 35, 36, 37, wherever you wanted to put them. Quite frankly, silver broke out above there, and man, oh man, we're seeing the silver stocks lead. And that's all in this environment where gold continues to broadly move sideways. Gold's turned into a pretty boring market as we've seen some other metals and commodities take the headlines. Craig, what do you think about this silver breakout?
Well, Corey, it's certainly been fun to watch. The last couple of days last week, we were up $2.25 or something like that. Really on the backs of that copper announcement. What was it, Tuesday? Maybe, I think is when that was. Tuesday afternoon when Trump first mentioned it and then put out a tweet about kind of solidifying the idea on Thursday. And that's when copper new all-time highs, up 550, 560 a pound in New York. And then silver just kind of played along. I've seen some reports that the tariffs that are supposed to go into effect on August 1 against Canada and Mexico would include silver from both countries, Mexico being most important in that regard. So there's all that kind of stuff swirling around. I don't know, you mentioned the breakout in price. It's been moving up in kind of that typical stair-step pattern. It's, at least for silver, certainly not going parabolic or anything like that. And that's typically how it works. In any kind of bull market in these precious metals, you get this kind of two-step forward, one-step back routine. And we just took another two steps forward. I don't count me in the camp, please, of, the silver to the moon, $50 is next kind of stuff. We'll get there. I'm confident of that. We'll get back to those all-time high levels at some point. But it's not going to be next week unless there's suddenly, 100% tariff or something on silver. God knows what might come next. For now, though, it's just the same old usual two-step. We're seeing as price goes up, open interest be expanded again. Just in the 2 days, Thursday and Friday of last week, silver COMEX was up $2.32. But open interest was up, I'm just checking my notes, 14,000 contracts. That's what, 8%? And so what's happening? More buyers and sellers, right? So price is going up. As part of that, as price is going up, and there's all these speculative longs coming in, there's new shorts being created. There's new contracts being created. Typically, banks, commercials on the short side, speculators, hedge funds, whatever the like on the long side. So I guess my final point in this answer is I saw a lot of stuff this weekend about, this is a big short squeeze and all these bank shorts and commercial shorts and everything are going to have to start covering their shorts. Or maybe that's what's happening. There's no sign of that happening at all. That is not, might still happen. That commercial short squeeze is what drove price from 38 to 48 in April of 2011. But as we sit here in mid-July of 2025, there's no sign of that yet.
Craig, what about this environment then of simply silver vastly outperforming gold? This seems kind of like a catch-up trade, quite honestly, where gold was leading. Silver was, yes, doing fine, but it was lagging. We had the gold silver ratio up to 107 earlier this year. Now it's back to the mid to high 80s. That's a big change. We haven't seen that kind of move really since late 2022 and in 2020. This seems like, again, a catch-up trade, but historically, what have you noticed when silver vastly outperforms gold?
Well, I think we've seen it. Now, Corey, we've seen this tremendous run in price. I mean, what was silver? The early part in April about got down to 27.50, 28. So this is a really significant run in price over the last 100 days. And that's resulted in that big reduction in the gold silver ratio. Again, I struggle at this point thinking that, the price is about to explode higher, that sort of thing. In fact, from the history, and I got this big stack of commitment of traders reports on my desk. We're back now to, I'd speculate off of the report from last Tuesday and what open interest has done and what price has done in the 3 market days, 4 market days since. We're probably at the largest commercial net short position for COMEX silver that we've ever seen. We're not back to the highest gross short position yet. That was 160,000 or so contract short, some 800 million ounces gross short in August of 2019. We're not at that level yet, but we are at record levels if you subtract the commercial long position from the short and get a net total. That net total is probably over 400 million ounces at this point. So you get a move like last week where we go up 225 in 2 days. I mean, that's $900 million in paper losses over those couple of days. And Corey, I should backpedal this. Remember, we have discussed this a couple times in the last month or so about silver being that Newton's law of motion or whatever it is, an object at rest stays at rest until a force is applied upon it. It's getting some of that force. And this isn't to say that more force can't be applied and more speculators come in and more longs keep coming in and more interest keeps pushing it higher. But that requires more and more interested parties to do that. And so I think I'm kind of in the camp we'll probably continue to fiddle along with this kind of 2-step forward, 1-step back. We just go sideways again now for a few weeks and digest these levels would probably be a pretty positive development.
Hey, that's totally fine, I think. I think the last thing we actually want is a spike to $50 because, well, we've seen it over history a couple of times. Big spikes lead to pretty big drops afterwards and kind of an end of bull markets. But, Craig, when we balance out here, again, gold's kind of going sideways. Silver doing a lot better. Underlying stocks, I've noticed a lot of the big boys, a lot of the leaders of earlier this year and last year, they're still doing well, but they're in no way doing as well as the smallest stocks. So what does that tell you about the type of money that's coming into the sector, or is it a simple rotation of money from the big guys down to the little guys?
That's an interesting question, Corey. We always used to think of it as like this pyramid, in a bull market, that it goes in the large caps first and then kind of mid cap and the juniors after that, eventually exploration companies whenever you're in a bull market for the precious metals. Are we starting to see that in the exploration? Yeah, but even if we're starting to see that, I mean, you use the old baseball analogy. It's like the top of the first inning with 1 out kind of thing after the 14 years of wandering in the wilderness for the Toronto Venture Exchange, So I don't know. Do certain projects and resources become more economical, and as these big producers are just banking hundreds of millions of dollars every quarter to suddenly, their next door neighbor who's got some good looking drill holes become palatable, as a place to spend some of that cash. So all of this kind of works in a cycle. It'll be interesting to see, though, as we get now closer to the next round of earnings reports. I was speaking with, I'm sure you know Joe Mazumdar, right?
Oh, yeah. Yeah, we have Joe on the show every month.
I was speaking with him a couple of weeks ago, and he said, a lot of these producers get on this kind of merry-go-round of analyst expectations. They print a rosy picture for whatever year. And then as they're kind of not quite making it as they get into the fourth quarter, they just pull everything they can from the first quarter and even the second quarter of the next year just to jam it all into the fourth quarter of the current year so they can say, hey, look at this, we met our numbers, and all that kind of stuff. And then the cycle begins again because now all of a sudden you're going to be a little bit behind in Q1 and Q2, of the next year. And then you got to play catch up again the following year. And so I wonder if some of the stagnant qualities of some of these bigger miners, Newmont and Agnico and the rest have been kind of going sideways for 6, 8, 10 weeks. I wonder if part of it isn't due to that. Now, one last thing, though. You mentioned gold and, going straight up, then things that go straight down like we've seen with silver a couple times. What we're seeing right now in gold is very productive. It may not feel like it, right? We've been going sideways here for 3 months. But the fact that it hadn't gone straight down, right? After, I mean, we started the year up 25 some odd percent. I mean, that's a hell of a year. You can go back and look at just over the begin this first 25 years of this century. There's maybe 1, 2 years that have a 25% gain. We had one of those years was last year. And then all of a sudden we have another 25% in the first 6 months. I mean, if we just went sideways in gold for the next 6 months, there'd be a lot of people like, damn, that thing, and not doing anything. But another 25% year hot on the heels of last year would be for, gold's relative performance. That'd be fantastic. So the fact that it's just hanging in there and going sideways, not too shabby. And that's pretty good for the metals too, or for the mining shares too.
I'm with you in the fact that gold going sideways is positive, especially because it's at these all-time highs. They're really close to all-time highs. However, when it comes to the mining shares, one thing we have seen is that when gold moves sideways, the interest wanes in some of these mining shares because it doesn't have that momentum. If these miners aren't growing production and the gold price isn't going up, then their numbers aren't getting even better. They are still very good at these levels, but maybe it was even Joe that was on the show recently that said one constant is that costs will always go up. So technically their margins right now, large, would decrease a little bit. So maybe it's a different story because gold is up near these all-time highs, but it is something I've noticed in the past there, Craig. And being an accountant, I thought it'd be different. I thought sideways gold price would be better for people to forecast numbers and they get more confidence in them. But in my career in this sector, it's not what I've noticed. I've noticed stocks drift if the metals price goes sideways.
Yeah, oh, for sure. No, I think you hit it right on the head, Corey. No doubt about it. You need this kind of expanding margins and a higher price where it's getting talked about and bandied about so that people are actually calling their stockbroker saying, yeah, they were talking about, I just read about gold stocks in the Wall Street Journal, that kind of thing. All of that requires a higher gold price. I guess maybe what it that requires of us, if we believe that, the price of gold is ultimately going higher just due to the economics of the debt-based monetary system, but you can't predict exactly when those spurts in price are going to come, then maybe the onus falls onto us just to pick out the best companies and then buy them on a dip. You get a substantial pullback of 20% or something like that, but you feel like the gold price a year from now is going to be higher, then you know what? Maybe that's what you do. And rather than chase, you just kind of hold steady and look to buy the dip in high quality companies that you're confident will eventually take advantage of that higher gold price.
I think that might be the play right now, considering the gold, the silver, especially the silver stocks and the smaller stocks are doing really well. I just went through some numbers and silver being up, I think it was about 17% since the beginning of June, so about a month and a half. We've seen some silver stocks up 100 to 200% in that time. They have vastly outperformed. What are you seeing in your portfolio? I know you follow some of the big guys, but also these little guys. They are the big gainers right now.
It's funny you mentioned that. I was just looking at things back on Friday because I had to move a few options around just for playing in the casino. And I looked at a couple of my holdings, the whole page from my IRA and stuff like that. And everybody on my site, I update those once a month so everybody can see, I mean, full transparency, which ones I own, and my cost basis and profits and losses. My biggest gain, I think, across everything right now is Abra Silver.
Oh, yeah, well that's been a great stock. That one's been
Yeah.
outperforming for the last year plus.
Isn't that crazy? I mean, you think Agnico, all these others that have just done great. Lundin Gold is, there's all these big miners, but the most hands down, I mean, just rolling is Abra Silver. And again, where do you even categorize them? Are they a
That
near
one's a
producer?
very much advanced explorer slash developer that they've truly grown from what they were a couple of years ago. Everything's going in their favor, including jurisdiction. Argentina is very greatly favored right now. Plus, they're a silver stock. So, yeah, I think there's a very good reason why that one is outperforming.
Right. So those are out there. And so that again, I'm very fortunate to hold it. But that's a good example of if you get the right company, like you mentioned, the right jurisdiction, high quality team, and then you get an underlying price of product that is going in the right direction, and you get people start to notice, and everything kind of comes together. I guess if anything, if I were to sum up what I wanted to say today, though, there's a lot of folks. Now I've been doing this a long time, and there was a point 15 years ago where I was the new guy, right? 2010, 2011, and there were older guys like Mr. Turk and Jim Sinclair, and the rest, who I feel so blessed that I had a chance to get to know. Well, now all of a sudden I'm the older guy. I'm the old maven. And there's a lot of accounts I see, influencers, if you want to call it, social media people with, that suddenly have 10,000 followers on X that are like, oh, to the moon, and now we're breakout. And, they come up with these numbers that silver's going to be at some point. Maybe it'll get there. But I just, like, until we see a real change in how price is determined between New York and London, then bull markets are going to continue to play out in the same way they always have. A rush of excitement on the long side till that kind of excitement runs out and those speculators start to take profits. The commercials that were taking the short side on the way up, then they're able to cover some of those on the way back down, and then everything resets and you wait for another wave higher. So at this point, that doesn't mean we can't go higher this week with, this inflation data that's out there and everything else. But I would caution everybody listening to us to not get their hopes up too high for some immediate gratification of $100 silver or something like that. That would be highly unlikely, at least in my opinion.
Well, there's a lot of people talking about it, so we'll see. Yeah, I'm with you, Craig. Again, those spikes aren't necessarily good long term. Let's also talk about copper, because copper moved very strong after the tariff announcement, the 50% tariffs, and it was really one of the only markets that moved on the back of the tariffs. I saw a lot of the international markets of those countries where Trump announced additional tariffs. Those markets didn't do anything. If anything, they went up marginally. Copper seemed to be the only one that responded. And look, we've mentioned it before, that whole taco trade. Trump always chickens out. Could copper be in for something like that where, who knows, the next couple of days we could hear that he came up to some sort of agreement with copper producers or countries that supply the U.S. with a lot of their copper, like Peru, a lot of South American countries, that could be off the table. How are you seeing the copper market post that tariff bump?
Well, for sure, that is the risk when you have a president who's sort of a loose cannon rolling around the deck, and you just never know what he's going to say. And God bless him, he's out there being as transparent as he can. At least, he's having press conferences. He's speaking with reporters. I mean, that's a complete different from what we got used to under Biden. But you never know what he's going to say. It's like this copper tariff idea from last Tuesday just kind of came from out of the blue. And it was mentioned kind of in passing at a cabinet meeting where he was fielding some questions at a cabinet meeting. And he just, boom, and we're like, what? And copper takes off 10% in about 3 minutes. Now, curiously, London copper has not done that. I mean, we're seeing $5.50 for a pound of copper in New York. You'd think London would be, 11,000 a ton, but London's at $9,600 a ton. So this is all pretty still focused here on the U.S. and again with Trump's tariffs. And that, again, he could come out later today and say, I've changed my mind. Whatever. It's too important of a metal, whatever. You don't know. It has, though, like you said, I mean, it hasn't had what would seem to be a direct impact. It's like when copper shot up, the silver seemed to be impacted, but it was a couple days later. Platinum and palladium, platinum was already rolling before all of this. And now, here, even though it's down 3 or 4% today, looked like it was breaking out, though, from long-term. Palladium posted a weekly close back on Friday that was one of the highest in 4 years or something like that. And looks to be all kinds of open field running above where it is in price, too. So there is kind of a connection, albeit maybe secondary, to what's going on in these other industrial metals. So I would imagine if Trump does come rolling out later this week, pulling back on this proposed copper tariff idea, then we'll see a one-to-one connection right away. I can promise you that, going the other way.
Yeah, who knows what's going to come there. But, Greg, let's also look to this week. What we do know is coming inflation data coming out when this is posted tomorrow, actually, Tuesday, July 15th, and more inflation data to follow, and the NYSE option expiration at the end of the week. What should we be paying attention to?
Well, I'd be very mindful of option expiration for all the listed ETFs and the major miners. Maybe not the mining shares so much because they've been mostly going sideways. But my experience has been, if you've had some big run and everything is heavily skewed on the call side in terms of open interest, that you're exposed to price falling into option expiration as a lot of those calls get suddenly worked out of the money. But we haven't had a lot of major craziness in the mining shares over the last 3 or 4 weeks, at least the major ones. I would be a little mindful of maybe the SLV after this run in silver over the last few weeks, particularly late last week. Either way, with that option expiration for all this stuff on New York Stock Exchanges, miners and the big ETFs, that'll be 4 o'clock New York Stock Exchange close on Friday. They'll price and all those things settle in cash. Okay. So there's always, it seems to be an incentive to, if you're the one that is being forced to settle out and pay the cash, to maybe try to maybe have that price be not quite as high. So watch that, be mindful of that as we go through the week, and expect volatility, particularly as we get later in the week.
All right, Craig. Should be an interesting week, but hey, every week seems to be interesting right now. Who knows what's going to come out of the political scene, and who knows what other price moves we have. We are in summer, so maybe things will calm down, but at the same time, this year is showing us that every week there will be some sort of different fireworks. But right now, hey, a lot going up, including the metals and a lot of the smaller stocks right now. Again, Craig Hemke is the founder and editor of TF Metals Report. Click that link in the show notes to read over his recent work. Craig, great chatting with you. Have a great rest of your week.
All right, my friend, you too.